Firstly, we'll start by answering what actually a petty cash fund is. A petty cash fund is an amount of cash kept on hand by a company to pay for minor expenditures. Now, these might include postage fees, supplies, or even coffees, which would fall under miscellaneous expenses. This petty cash is often held on a company card, which is managed by the custodian of the fund. Accounting for petty cash can be broken down into three key steps, the first being establishing the fund. This is done by writing a cheque for the amount of the fund, which is then cashed in and is looked after by the designated caretaker of the fund, called the custodian. Once the fund has been established, payments can be made in two different ways. Firstly, cash can be taken from the fund to pay for minor expenses. On the other hand, employees can make payments with their own personal cash and can seek reimbursement from the petty cash fund by keeping the receipts from their purchases. Finally, to replenish the fund, the remaining cash is counted and then the company cashes a cheque for the amount that brings the total cash fund back to the original balance. Now let's look at an example of a journal entry for establishing the petty cash fund. In the example, on the 1st of October, North Shore Gardening and Maintenance have cashed a cheque for $500 for petty cash. Firstly, we'll start by putting the date into the journal, October 1. Now we will debit and credit our different accounts. Firstly, our petty cash is considered an asset, which in this case is increasing, so we'll therefore debit that $500. In order to fund the petty cash fund, the company must pump their own cash into it. Therefore, we will credit $500 of cash. Now that we have established our petty fund, many people think that we must make journal entries when payments from petty cash are made. However, we do not record these purchases as they happen. This is extremely important to know when accounting with petty cash. Now let's look at replenishing the fund. Here we have the petty cash fund replenishment report. In order to find out the amount of money needed to replenish the fund, we subtract the amount remaining in the fund from the original balance. In this case, we subtract 326 from 500, meaning that we require $174 to replenish the fund. So in our journal, it will look something like this. Notice how the date of all our entries are actually on the same day, even though they may not have been purchased on this date. This is because we account for these purchases when the fund is replenished, in this case on the 31st of October. We then debit the petty cash expenses as follows, and in order to replenish the fund, we must credit cash again, like we did when we established the fund. Sometimes the amount of cash requested to replenish the fund does not match the total receipts, as the custodian may not obtain all receipts or will be given incorrect change. Therefore, the discrepancy is charged to an account that we call the cash short and over account, which is a temporary account that can either have a debit or credit balance and is used to balance the journal. In this case, the company has lost $5 from petty cash and will need to record this in the journal entry. Here's an example of a journal entry which incorporates the cash short and over account. Since the receipts totaled to an amount less than the requested amount to replenish the account, we will debit the cash short and over account $5.